Hey everyone, John Henry here from School of Trade, and today we're going to be taking a look at a wave pattern on gold. So we've had this nice steep sell-off that we're looking at right here, and the buyers attempted to knock it back above this weekly level here at 1302.3, but they just quickly failed right back down again. So what I'm looking to do is I'm looking to hop on back to the downside again. Now that we've pushed into our trigger zone here, we can look to hop in short at 1301.5 currently. A lot of nice things about this setup. First of all, obviously the 1-2-3 reversal. That's always our favorite. On top of that, we've pushed into the trigger zone, which is always a good thing. We did have the cross down. We have a cross up here, which is a little bit higher risk, but with the angle of the cloud and with the angle of the moving averages and the fact that we've broken below that weekly level and the buyers already showed us that they couldn't do it, this is a perfect area to look to hop into the short side. Now, along with that, we're also coming into the BMT here at 1302.1 or so. So there's a lot of areas of resistance in this location. So we're looking to hop in short here at 1301.5, and along with the downside, we're going to be looking at just the typical +5, +10, and then on the way down here, we've got a couple different levels that we can look at for a final target. A +20 might not be realistic. But we do have this weekly level, the next weekly level at least, down here at 1299.3. Now that is pushing below the 1300 level, and usually when you come into those big areas, you get these bumps where it just kind of shoots through it really quick and then comes right back again. That happens as well with the weekly levels too. Now you usually have one of two scenarios with these weekly levels. You either smack into it, bounce right off of it, or you smash right through it. So what we're looking to do is possibly play this weekly level to the downside here. But we've got our initial target here at 1301. That's going to be a 5-tick target. Then we've got 1300.5. That's going to be the 10-tick target. And then down here, actually, that's a perfect spot right there. 1299.5 is a gorgeous spot to have that final target down there. So looking at 1299.5, it's a couple ticks ahead of that weekly level. Always kind of a nice area. If we start seeing strength coming in to the downside, coming into this target, we might be able to expand it out a little bit. The next area down really doesn't happen until the next weekly level all the way down at 95.8. Now, we're probably not going to get just a parabolic shot straight down to that level. But in the same regard, we can possibly look to trail our targets a little bit farther down to maybe get a little bit more out of this move here. Like I said, when we come into these weekly levels, one of two things usually happens. You either bounce immediately right off of it, or they just blast right through it. So when we're coming into this next weekly level here, since we're already showing these weekly levels aren't offering that much support and they are breaking down, we might be able to come into that weekly level, expand it out a little bit, and maybe pull an extra, 5-10 ticks out of it to the downside. So we'll see what it wants to do, but we've got our first target here at +5 taken off. So now our risk is essentially off the table. Stop up here at 1302.1. So we're risking 1 total net tick. We banked 2 at +5, we're risking 2 at -6. So exactly right where we want to be. So coming into our next target here, we'll see if we can get it filled, but this trade's probably going to take a little bit longer. And because we're expecting this weekly level down here, we'll keep an eye on it, but we're going to expand the target down to 1295.8. If we get a reversal bar directly off of this 1299.3, this weekly level here, then we'll just take it out right where it reverses back out again. But if we come smashing right through it, we want to be able to profit on that aggressiveness through those weekly levels. So we'll be back in a little bit to see how we start ending up. All right, folks, we're back. We're quickly blowing right through this level. So this is what we were looking for, that quick smash through. So now that we blew through that level, we just wanted to be a little bit more aggressive. We don't want to sit through a reversal in that case. It pulled right back up to our stop right here. Got taken out at 1298.9, so it did get a little bit extra out of it. We were only expecting to get to 99.5, so a little bit of extra definitely, over the long run definitely makes a really big difference. But in terms of where we entered, we got 2 off at +5, 1 off at +10, and we're able to lock in a little bit extra here from our entry down to where we were taken out at 26 ticks. So we've got 26 plus another 20. We're sitting on 46 ticks total for the trade. So overall, a really nice trade just in general. But that's that little bit of a blow through that we were talking about. You can see, zooming in on this, they did start bouncing it a little bit. And that's where you're going to want to kind of ratchet your stop a little bit closer. But in this case, it just immediately smashed right through that level shortly thereafter, that little bit of fluctuation. And then fell right back down again. Got us an extra $60 on a contract, which definitely isn't bad. So that's going to be the trade for today. If you have any questions about it, feel free to send an email to School of Trade. And don't forget to check out our trial at schooloftrade.com. Have a good one. Bye.